forth. Let's take a macro view first before we hop into the numbers. What I'm gonna do with the numbers, the psychological and institutional numbers, is I'm gonna put them up on the backboard. Maybe probably not today, unless someone who's got good handwriting, good penmanship. No fucking volunteers.
I do.
Marsha?
I do.
We'll do it. We'll do it another day. I'll put them up here today, and then we'll transfer them over in the back. Basically, kind of how we have the options thing like that. Like we don't need that board back there to say move like Anthony. We already know that we need to move like Anthony. All right, we can erase that. Okay. Macro view. So kind of what me and Greg been talking about back and forth. I think it's key. Let's move the chart over to. Let's move the chart to the S&P and kind of talk a little bit about what's been going on. We've been following economics. You guys been making me proud or what?
Fine.
Trying. So what's going on? Tell me before I tell you. What happened? I want to see where my
You talked about the CPI report yesterday?
Yeah, but I want a general theme. This would be before, because wouldn't be fair because this is where we've been at in general. What we've been having this ongoing debate about where we're at. You know, come on, I got a guy that's not even a student yet, and he's volunteering to talk, and y'all are sitting over here making me look bad. Like, what the fuck? Where are we at? What have we been talking about?
We've been talking about how we're possibly in a bull market, and I think we've seen maybe over the past couple of days, we don't know.
We don't know. We're in that. So we were talking about that trudging along thing, right?
Mm-hmm.
Like so when we look at the essence. Thank you, Jordan. It's about time someone stepped up. Marsha. Anyways, so we go to the weekly, all right? And I told y'all that it's not going to come back down here. And during this period, I said that, right? I said that last week, and I stand by that. Okay. Then I also said, is it going to continue? You know, we did exceed the high over here, so basically we do have an uptrend on a weekly. All right, a very small, minor uptrend, but we're just getting on that version of it. So when you have that uptrend on the weekly, from a macro point of view, a big point of view, you're in a bull market, right? But like Greg was talking about, and Greg was 100% right, as fucking much as it kills me to say, right, is we're trudging along. And this is why. Think about it. CPI was up yesterday, okay? But it wasn't that up. It was 0.2% higher or something like that, right? And then the retail sales this morning were hot too, right? So the economy was hot. But what's happening? Now remember, at the end of the day, the market's going to react the way it wants to react, all right? And people are done wanting to bet on a loser. Remember, the general public trades mostly in what direction? Up. Okay? It took a long time last year for them to come to terms with a down market, right? So for short sellers to be able to take control. Eventually they had to. If they listened to Powell earlier, it would have went down earlier. Now, basically, what the Fed, what I'm talking about right now, I might be saying the same shit for 2 straight months right now. I don't know. This is the really good traders are the one, and that's why he's sitting there and he's anxious. But he knows Eric's disciplined, man. He ain't gonna give it back. The best traders in the world are the ones that don't give it back during times like these. Okay, they either take a little less, or they find sideways strategies that allow them to make money, but not as much. That's why, like that whole 1-to-1 and all that stuff. That's good stuff right now, because we don't really have a direction. I mean, you got to trade what you see, and that is bullish still, okay? But we also, in the context of what's going on, we know what's going on right now, right? There's a great debate of how many more times are interest rates going to get hiked, how long are they going to hold them, when are they going to start regressing them, all that stuff, okay? And all we can do is pay attention to the economics, all right? And pay attention to the speakers and the Fed speakers that come out and see what they say, and, you know, the fact that was that report today that was hot, okay? you saw the instant reaction, right? Dollar up, market down, okay? That's a risk off, right? Risk off market. Dollar up, market down. But what happened right after that? It reversed. And then it reversed again. And then it reversed again. And then it just kept playing bouncing back. Because people right now, it's that those numbers aren't so bad, so skewed, that people have to go that route with it. Does that make sense to everybody? And that means we are kind of still looking at that consolidation crap. And we might be looking at it for some time now, which is okay, right? That means, to me, that's less trades. Don't give it back. Like at the end of the year when I said, when y'all were making money in Forex, and I was like, you know, when this thing flips, you don't want to give it back, man. Those transitions is when seasoned traders are good and and people that aren't, they get beat up, man. That's it. You know, I don't care what strategy you're doing, day, swing, long term. If you're, it's when the tides change, when the seasons change. All right. Now, I'm not gonna do a trade today because I've started doing something a little bit different. It's not a huge change, but I have been doing it, and I don't really have enough data to get into it. But basically, I've shifted, and I mentioned this. I've shifted my time frames. All right. So I've gone curve weekly, trend daily, and I start looking at my zones on the 4 hours. Okay, but I still account for the monthly time frames. All right, I still have them. You know, I still have them charted out. Basically, if you look at the screen right now, you can see it. Right. So if you kind of look at, what we got, the S&P, we're on the weekly chart, but basically look at right here. If there's a double line, okay, that means the weekly and the monthly time frame is in the same area, right? So basically that's what that is. But you see that red line up there at the top? That's where the monthly supply would be. Does that make sense to everybody? The reason why I'm doing this is I'm trying to get more volume of trades up. That's what I'm trying to do. All right, but I don't want to post them right now because I want to run through them. Okay, I know it's not going to be a huge difference. Me and EB sat down the other day and we were looking at it, but at the other thing of it too is I generally look at long-term, big picture things that I'm trying to do, and you know, if I want to, you know, I'm always trying to create something specific that, you know, that is teachable and sellable in the long term. Does that make sense to everybody? And there's some things in trading that I can't teach because it's a failing thing. It's you know, it's intuition. So the 2-to-1 thing works and it's great, but on those higher time frames, we don't really get a lot of action, or the stop losses are too big. So I figured if I dial down a little bit, you know, I could get in and out of these trades a little bit faster. So that's kind of what I've been doing. But let's look at the numbers. Let's look at the numbers, all right? Let's take a look. Because these numbers, let's look at the numbers and then let's talk about why they're important, all right? So let's start with it from Forex and then kind of move through the different asset classes as we go through, all right?
Forex and Forex.
Why is it Forex?
That's cool. Forex is made for poor people.
You're wrong about that, man. You know what's funny that you said that?
It was.
No, it wasn't.
Options was made for the rich.
No, it wasn't. You're so off right now. But I'm not going to give you a hard time because that is the perspective that society has.
Yes.
I mean, I'm not saying you can't get rich off.
No,
Forex.
hold on. I'm telling you, Singapore, slow down. All right, slow down, gunpowder. Okay, listen, Forex. What he's saying, 100% is the perception that people have in the culture. Absolutely. Now, when I teach Forex in that 3-day class, I make sure I say, you just recently went through it. What did I say? Banks put 90% of their money where? In the foreign exchange market. Banks aren't poor people, all right? So my point is, wealth management is phenomenal in Forex. people just don't think like that. People think, well, there's so much leverage, I don't need a lot of money to get started.
Yeah.
So what you're saying is the commonality. And that also is true, what you're saying, right? But I don't want you to look at it that way. Because,
Can I clarify my philosophy?
well, it's too late.
No,
Once
it's too late.
the toothpaste is out of the tube right now.
Nah,
man.
but
You can't
hold on.
clarify.
You didn't get it. I gotta get a chance to explain
All right,
my
go
thought
ahead.
process. So this is my theory.
Okay.
The rich folks said, all right, here's how we're gonna do it. All right, you got 3 asset classes. So there's more asset classes, obviously, but we're gonna talk about 3: forex, futures,
And options.
and options. So the folks said, okay, we're gonna create forex, so we can give like poor people a chance to get in and get a chance to get rich. It's a little harder, but it can be done. You know what I'm saying? Options is like the motherfucking exclusive golf club. You can't come
It's a
in
country
here.
club.
Yeah, you can't come in here but 3 times a week. When you get your money up, then you can come every day. You know what I'm saying? But
They even
other
have
than
color barriers in the country club. They might.
they might. You know what I'm saying?
Yeah.
Futures is the only middle like ground where
Futures is where the common man can,
Yes.
common man and common woman can come
you
together.
can make some shit happen. You know what I'm saying?
Now listen, I like the conspiracy theory shit, because that stuff does sound good. Total bullshit what you're talking about right now. Now, hold on, let me, but what he just summed up, realistically, no, what he summed up for the average person is kind of how it works. You need money to trade options. Futures, you kind of can be in between. No, you're spot on. But my point to you is this. We don't want, that is what, hold on, we could take a conspiracy theory. That's what they want you to think.
Like, I'm not dissing Forex. Forex is actually my favorite asset. I've made
But hold on, let me make a
more
point.
money in other assets, but I actually
But let me
like,
make a point.
I love
And my
Forex.
man right here holding the camera can contest to this. Right? I swing bigger than anybody here.
Yeah.
And it's mainly in FX.
No, that's facts.
So that's kind of my point. Like,
I see it, Trey.
and he knows it as well as I know it. I built up one account. So think about it. If you have more leverage and you have big money, right? I can make big swings and not really leverage out that much money. All right? So what you're saying when you lack capital is accurate. But when you get to capital, I don't want you to think like that anymore, because when you get to capital, I don't want you to be like, I've graduated from this asset class, I'm over here now. You know what I'm saying? Because, dude, banks have more money in the world, and most of their profits come from the foreign exchange market. So I want you to keep that in mind, that it's all, basically, they're all income and wealth except futures. And if you really wanted to trade futures for wealth and swing it out, you could, right? You could. You'd just have to get out during the
Futures
rollovers.
should just be like an income account, right?
It should. That to me really is the one that if you really want to just blatantly say that's income, that's day trading, maybe turn it into a swing trade for a week or so, yes, absolutely. But the contracts are going to roll over on the months and stuff like that, so you'd have to pull your money out and get out. Options, swing trading and day trading. Wealth and income, right? Not as much day trading, obviously, right?
Right.
If you want to do that, you go to futures. But dude, Forex, I told you, we got a guy here. I've told you all this, that we got a guy here that started with 50K in his IRA, and he short sold Aussie dollar in 2010, and he's got like $1.5 million now. Look at it. That's one trade. Look at this on a monthly time frame. That's a macro view. You're starting, that's 2011. Now, has this gentleman moved his stop down? Of course he has. He's managed his trade. He's not just out there swinging in the fields openly, right? But, you know, he's probably reduced or taken profit off or locked stuff in, right? And that's a 12-year trade. That don't sound ghetto to me. Did you get what I'm saying? I'm trying to broaden your horizons on this, right? But for the most part, what you're saying is accurate. And that's the perception, but I don't want people to have that perception. I want them to broaden their perception on it, all right? Because you know what you're saying is very true, because also, what do? Hey, you got to start an account with like 20 bucks. You need 500 to 1 leverage, and then people, you know, they get their accounts blown up, and and basically they get railroaded off it. When we know it don't work that way, you know what I mean? So, but I like your conspiracy though. I can talk that. I can also get into the conspiracy that in the 1960s and 70s, probably rich, powerful white men were sitting in a room and they decided that you had to have a degree in order to do something. And then they jacked the prices up of the college tuition.
Yes.
They did.
And then, shut up, Greg. This ain't your time. If you want to talk, you come in here and talk. You didn't come in. And I knew you were going to do this shit. So keep your mouth shut. Now anyways, with that being said, I'll talk over you, Greg. You'll have your time. You'll have your time in court, all right? So, basically, I do believe that, though. I don't know if it was a rich group of white men. I was just being an asshole with that. But I do believe the powers to be in, like, at some point were like, yeah, let's make sure you got to get an education or you're fucked. I believe that. Because college tuitions weren't like that in the 60s and 70s, man. It's a racket. It's a total racket. I won't call college tuition debt, because it's not. It's an investment, but like an investment you're not going to pay off till you're like 38, 40 years old.
Right.
Unless, that's why it's like think outside the box, so. All right, let's get back on track, man. All right, number. All right, go ahead, Greg. Everyone wants to hear you.
I just want to tell you, you're garbling out sometimes when you're talking and you're making a point and it garbles and it's really kind of, I just want you to make sure that you're not over speaking the mic, that's all.
Here's that.
Adjust your mic a little bit.
Yeah, it might be okay.
What about now?
Perfect. Thank you very much, sir.
You're welcome.
When someone has a strong voice and they speak into a mic, it can sometimes do that.
Thank you, Greg. Thank you. Everybody here misses you, and we wish you were here.
I miss you guys. It's like, even though it's easier for me to trade from here, I miss the community so friggin' much.
That means get your old ass in there next time. All right. Here we go. All right. Why do you think I talk about these? Why do you think I talk about these numbers, these institutional? Now is that better though, Greg and Hugh? You can hear better?
Yeah, I can hear it better.
I'm not gargling.
Nope, sounds great.
Okay, I just moved the mic down. All right. Banks and institutions. Now this is, how much time do I got? Because this is what I've been. Well, I know my own time, but I got time.
You got time.
This is key. Look at, if I'm gonna take a facial look at everybody in this class right now. Who's here? Who's online? I ain't teaching this again. All right, I ain't teaching it
You ain't
again.
trying to hear that.
Now, I can't tell you to look off of David Warner anymore because David Warner is no longer part of OTA. All right, David Warner's doing his own thing, and you know what? I'm so glad he is because David Warner is one of the most talented and traders and teachers I've ever met, and he mentored me, and he's one of the, honestly, as far as being a good person, he's the best. Okay, David, and I hope he's successful. I do.
Yeah.
I also know that business is saturated, and just because you're a good trader and people like you doesn't mean anything. You also have to know how to be a salesman and a business person to make that work too. So God bless him. I hope it works for him. All right. If he has something cheap out there and you got some extra money kicking around and you really want to dive into it, he's worth it, depending on the cost of it, whatever it is. I would tell you that. All right. Totally goes against everything in my non-compete contract here with Online Trading Academy. All right. But David's my guy. David got me from good to great, okay? David really made it like banks and institutions don't buy at smaller numbers. They buy at big round whole numbers, okay? They're not like us. They're not the peasant farmers, where they're not looking at the penny or they're right down to the cent. They don't care. They're gonna go gunslinging and slap down a big stack of orders on an institutional number because they know when price gets to that number, right, that they're going to control the market because they have the power, they have the buying power, all right? This all is validated by looking at our zones, right, that we have the patent on. if you look at the zones fall right on the numbers, right? So it's not like David used to always say, I can't make this shit up. There's no such thing as coincidences, right? So for me, it was like a revelation. Like I learned core strategy first, then I learned David's stuff, okay? And then it was like, oh my God, this guy's right. Now he teaches it in Forex. Me and Eric start looking at it in oil, S&P, stocks, option. And we're like, this thing holds water across the world, across all assets. I would say it's best used for FX and oil, but it's something you gotta be cognizant of, okay? You have to, all right? Especially if you wanna be a day trader and you start running into those big numbers. Like, I'll never put a target. If you watch how I trade, I'll never put a target like right behind one of them numbers. I won't do it. If I have to go past one of them numbers, I just won't take the trade. Like that's basically my rules. But I'm gonna start in FX, okay? David had a number, had a saying. Not all numbers are created equally. All right? That was his thing. Not all numbers are created equally. Remember that. All right? So let's start with FX. Let's say that was let's say hypothetically, well, what's Euro trading at? 106? Well, you know what? We'll do it as is. Let's move over to the Euro. All right. Euro's trading at 106.76. Beautiful! This is perfect. The stars are aligned. Okay. That's wrong. All right. Down here, what does that read? $1 and 0 pips, right? $1 and 0 pips. I want you to read it like that. It's going to make life easier for you. That up there is $1 and 10 cents and 0 pips, right? Now current price is 106.75. So that's probably somewhere right around here, we'll just say, okay? What's the difference in pips between here to here? From this one to this one? 0. 0? Who said 1,000? 1,000. It's 1,000 pips. There's 100 pips in 1 penny. So add 100 pips. If you added 100 pips to this right here, it would say 101.00. Does that make sense to everybody? Okay? If you add another 100, now if you add 125 pips, it would say, I keep putting the decimal in the wrong place. It would say 102.25. Okay? That would be 125 pips plus that. Does that make sense to everybody?
Yes.
All right? This is just how you count in this market. All right? This is why I'm showing it to you like this. All right? The bigger the whole number is, the stronger. So when you see a number like 110 or 100, okay, those are going to be your strongest numbers, all right? Those are like roadblocks, basically saying they're either good places to buy or sell, or they're good places to set up your targets, okay? In front, obviously. We always want to front run these things. We don't want to be right at them, all right? Other numbers that are important are every 100 pips. So that would be $1.09 in 0 pips, right? That's called a penny. That's 1 penny difference, right? That's all it is. It's 1 penny difference. Every penny is a strong psychological number. 109, 108, 107, 106, 105, 104, 103, 102, 101. All strong psychological numbers, okay? The reason why I'm teaching it like this is because I don't teach it the way that David does it, because I involve it in core strategy. David uses these numbers to buy and sell off of. I don't. I use my core first and then I go to the numbers second, but I have to have the numbers. That's one way to look at it. Another one, and this is kind of why they call it the quarters theory, is every 250 pips. So that reads 107.50. There's a 250 pip difference between that and that. Can we see that?
Yeah.
If we were going to do all quarters, it would look something like this. It would read $1 and 0 pips, $1.02 and 50 pips, $1.05, $1.07 and 50 pips, 110. That's every 250 pips. Those numbers, boom, 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 are super strong. Those are also very, very strong. Now in the grand pendulum of things, right, if we want to start putting it in order from strongest to weakest, the strongest is going to be your whole numbers, okay? That's going to be the absolute strongest. Your second strongest is going to be your quarters, right? After that, it's going to be a penny. I'm just going to use 105 as a penny example, all right, because the penny's right there, all right? So whole numbers, quarters, pennies. Are we tracking? Those are your strongest. Those are your strongest from strongest to weakest, all right? Now, when we start getting in the minutia of things, I have sweet spot numbers, right? 20s, 30s, 70s, and 80s. You hear me say it all the time, all right? So now basically I'm like, okay, this says let's say price is where that is, okay? Price is where that is, and I want to buy at I like this 1010 area, but I see the zone forming at 1010.80, okay? So when I say 70s, 80s, 20s, and 30s, I'm talking about the pip number in that situation, right? So these are called sweet spots, all right? These are like exotic numbers, right? That you're going to see me most of the time buying and selling on. Also, setting my stop losses, covering them, okay? And this is why you can't make it up. When you go to the zones that I pick, right, they usually end around those numbers, right? And that's why when a lot of people ask me, how do you get your wiggle room, man? That's how. I don't use ATR. I just go straight in and I look at the charts. That's why my charts are clean. I have clean charts, right? Like that's why I don't have all the crazy shit on there. I don't need it, all right? Not to say that it's bad, but I don't have to use it the way that I trade. So for example, when we look at, what are we on, monthly? For y'all at home, you can follow this. Go to the daily. Look at that. Look at that. What did supply do? Where did format? What number? Come on, man. Can't make this shit up, right? Look at that area. Go to a weekly. Oh my God, you can't make it up. Now forget that 5 because we're talking 5. Remember something again. In FX, you're not throwing darts, you're throwing water balloons, okay? The same futures, this isn't options. This is the poor man's game, right? So we're throwing, like, when I see people come in with like a 22 pip stop, like, dude, just round it off. Round it off, okay? Like, this is, you don't do this, this ain't futures. A pip is like an increment of nothing in this, okay? So, basically though, look at that weekly supply zone. What's that read? $1.10, right? Can't make it up, man. What happened over here? Oh shoot, institutions short sold heavy back then, right? And when they short sold heavy back then, did all their orders get filled? Nope, because it's proven when it came back up here that some of them unfilled orders were still sitting at $1.10. Whacked it, price came back down, okay? You can't make this shit up, so hold on. I'm going to correlate this all with the prop stuff that you've been doing, okay? Because this is what me and Eric got in common. Basically, when I first came through Pro Trader, which is now Core Strategy, I also had Scott, okay? And Scott, I remember saying to Scott, how do I get in that? How do I get in that drop-based drop right there? And he was like, you know, because he was keeping it simple, because I was a newbie, he was like, you don't, you wait for a retracement, all right? Eric showed you a way to do it with prop. I'm showing you a way to do it with the numbers, okay? So for example, at this time, this would have been a time or point of being to be able to take a breakout trade on a short sell at this number right here back then. Do you see what I'm talking about by that? Okay? Now you're in the move. So I do something similar to prop, but I just do it revolving around psychological numbers, institutional numbers. Does that make sense to everybody? Okay? Same concept, same exact thing. Just another way to do a breakout trade.
Institutional numbers in higher time frames, basically.
No.
Because
You
the
got
call
so.
strategy is actually like a minute, 3 minute time frame thing.
Yeah, but basically so it's similar, but it's not exactly the same. It's just another, like Bob Dunn teaches a breakout strategy. It's just another way. It's another way for you to have to place a trade without having to wait for a pullback. Like it's not very time related. It's more, does it pass the number? You know what I mean? Like, so for example, like basically like Earl, look at when price was up here above $1.10. Every time, so price is up here, forget all this is not here to say, okay? Price is up here, I would actually put my limit order in front of 110.
Yeah, like 180.
No, not that far. I put it at like right below it, like 109.95. And the second it crossed that number, I would get in that trade right away. All right? I'd play the numbers game. That's why we call it the numbers game. Right? So it's just another way to be able to, and now you gotta, I'm not gonna get, now here's what's happened with me now. I only use them on pullbacks. I stopped breakout trading, okay? So something like this, if I was cognizant of it and I was paying attention to it, I would have taken this. I didn't take this trade right here, okay? So when you start looking at, 110.80, 110.60, no, I'm sorry, 70s, 80s, you can start to see, all right, look at the bottom of this. What's that number say? 95.20. 95 is something that we call a wildcard number. That's a powerful one, okay? It's basically price. This is why I'm saying it's not going to hit the number exactly. That's why, look it. Can you look at that? I'd like to know what the low of that candle is. I really would. Let's go put our mouse on and see what it is.
95, 358. That's what I'm getting on my.
It tells you
95.36.
95.36.
95.36. So that's why you see a lot of times, and I would have missed that by a pip, I front run them by like 5 pips, right? I'll do 95.35 or something like that. So that would have been one of those ones that I would have looked at it, it would have just missed my entry, and I would have been like, ah! And I would have been like, oh man, I missed it, right? By a pip. Okay? You can't make this shit up. Go look at the charts. The charts say it. The charts will show you all these numbers, all right? Now let's move it over to a different asset class. Let's go look at oil. Because oil's going to be spread out a little bit different. Because the numbers are different with oil. Oh, I'm in the wrong one. We'll look at gold too. Let's go to the daily. Alright. Now, with oil, okay, current price 77.80. Basically, let's do a curve again. What I'm doing is I'm setting up a curve with these numbers. Now, I want you to look. Just look at where these wicks are, and then look to the right. Just look. Just look at it. I don't even got to say anything.
82.
That's probably right near 82.50, right? Probably right around that ballpark. It's probably a little bit below it, okay? Up here, 90. 92.50. You can't make it up. That's why I transferred right into oil, and it was easy. Oh, this is what I'm getting at. I don't want y'all to be lost. All I do is core strategy on higher time frames, and I use these as not just an odds enhancer, a must odds enhancer. They have to be there. If the numbers aren't there, I don't take the trade. Period. But you know what? For the most part, they usually are. Because core works. Supply and demand works, all right? Then you start dialing down. Then you start, then for example, like if I see another area, like it reminds me of something you said when you kept looking, you would say, I keep looking back and I don't know where to put the stop loss, right? There comes a point where I'm looking at the number where I'm not just structuring off the zone, all right, for the structure I'm seeing, I'm also putting into perspective the numbers that are sitting right there, so I can use those too. You could play these numbers all day long, all right? So like for oil, what's price at? 77, 76? So go 80 and 70. Now this market moves obviously a little bit different. Just say 55. All right. So where's my future people at? What's the difference between 70 and 80? What is that called? Ticks. How many points is it? Kate got it. 100 ticks and a point, right? Even your novice futures trader knows that. All right. 100 ticks and a point. So that's 10 points. We all know 10 points is a nice move, right? You get 10 points, that's pretty good. All right? Usually you're probably not going to, but look how can you trade futures and not trade oil? I mean, oil, how cool is oil? I mean, oil is always going. People are scared of oil, though. Scared of what they don't know. Scared of the unknown. All right? Oil's a gamer, man. You get up, watch. I forgot to tell you. If you want live data though on TradeStation, you gotta not TradeStation on TradingView. You gotta pay $4.99 a month from the CME. Did you figured I forgot to mention that to you. It's the only one. It's the only add-on that you gotta do on TradingView to get the It's worth it. It's worth it. It's just money invested, right? So the same thing. Are you ready? The same thing now. You think I like looking at numbers that say like 80-20? Yup. 80-30? Yup. What about 82-50? Yup. Let's go down. Let's drill down. Let's go to a 4 hour. Let's get a little more precise now. Actually, you know what? Let's go to a 1 hour. Okay. Look at that. How about that shit? Look at that. Right there. 77.50. Right on the quarter. I'm talking if you pay attention to this stuff, if you want, and I'm not going to trade this way, but you want short little fast day trades? There you go. If we drill down over here, I'm on an hour chart. If we drill down over here, 45, 30, 15, 5, 1 minute, whatever, right? You'd have some kind of demand zone in there or something like that, right? That you could take. It's an price moves at these numbers, okay? So what I'm getting at for you, and I'll go to equities in a second. In the meantime, in the short term, while we're figuring out what direction this market's going to go in, because we don't know, these are quick little scalps and day trades you can take. I'm giving you that, adding it. Now, I use it from a swing trader's perspective, but you can use it as a day trader. No question. 100%. There's no question in my mind. All y'all that are sitting in here are willing to put the time in front of the computer. I'm not. You guys know that, all right? Y'all are junked out, junky traders. I got a bunch of junky traders in front of me that just want to watch price move all day long. Yes. I love it. It inspires me, but I don't want to be that anymore.
Gives me a reason to keep.
Gives you a reason to breathe.
Keep smoking.
Keep smoking. Man, you definitely got relaxed intensity because you're high all the time.
Yeah. Well, I'm high right now.
There you go, man. If I wasn't sober, I'd join you. But I can't. Masha would get mad at me.
It's psychology, dog. Because you can't be all fucked up in your head.
I like it. and that's you got the right temperament for that, and for your jaw bouncing, man. Right? You're cool, man. You're like Patrick Swayze in Roadhouse. Take it outside the bar. Never inside the bar, unless it absolutely is necessary, right?
Unless we have to defend the public.
Yeah, absolutely.
Need more dirty dancing.
Shut up, you. Dirty Dancing was good, man. I like Patrick Swayze.
He's the man. Right?
All right,
soul.
let's look. Yeah, definitely rest in peace.
to the whole.
All right, give me what do we want to look at? Why don't we look at the QQQ or
Let's look at QQQ.
well, look at QQQ?
Yeah, why not?
All right. Now, what did I say before I get into this? I did not, and this is the thing. I didn't prepare this. I didn't prepare any of this. I just know what's on the charts. Now, I told you the ones that apply least to the numbers is what? Equities, correct? Okay. Okay, I can guarantee currencies and oil. And actually, hold on. Gold. I should have went to gold first. We'll go back to QQQ market. Hold on. So basically, if you start looking at gold on lower time frames, I'm in a gold trade right now. I just obviously I bought right here. Now price is just hanging out. So maybe my demand zone works, maybe it doesn't. We'll see, right? I think the stop is obviously I have this trade on think or swim, but yeah, I mean there's my entry right here. There's my stop. There's my target. So we'll see. I hope it's a good trade.
I'm gonna jump in it after.
No, if you make something, you gotta take care of me, man.
I go.
Give me some. I'll pass. But there was no connection to that. Okay, so we'll see what happens with this trade. Oh yeah, you were gonna buy me something. That's right.
Yeah.
All right. But look at basically gold. The numbers hold pretty well as well. But let's go look at. Well, let's take it a step of. So if y'all want to see the trade, the zone that I picked from, it's basically right here. Y'all can see that, right? Pretty big rally over there. All right, covering this shelf. Not going to cover this shelf, Kate. When you were asking questions like, how do I know when to stop? Because on the higher time frames, this is something different. So that's always a way to kind of evaluate. Go back and forth from low time frame to high time frame, right? To be able to look. So we'll see. We'll see. What's good? Gold goes up, oil goes up, right? So, and look at, bring that down, 1830, basically on a penny, all right?
So oil goes up.
Gold goes up,
Gold goes up.
for the most part, yeah. I mean, it's not, that's not solidified.
XAUUSD. That correlate?
That does. So commodity currencies, and for the most, always are going to move with oil. So that's Aussie, New Zealand, dollar, CAD. For the most part, yeah. But, unless something comes up, that's a risk-on environment, right? Commodities go up, market goes up, dollar goes down, right? That's usually how that works. Dollar goes down, gold does what? Goes up, okay? So those are just basic correlations. Sometimes people like to go the opposite way, so they kind of hedge their trade. I don't. I'm not that guy. So if I'm long gold, I'm short dollar. That's how I play it.
So S&P goes
So
up.
you're going long
Dollar
gold now?
goes down. Right?
Absolutely. That's a long play right there.
So you're going long gold now?
Yeah. I mean, you could market order gold right now. It's sitting at the entry line. I'm not telling you to take the trade, but it's right there. You haven't missed it.
So dollar goes down, gold goes up.
Yeah.
Right? S&P goes up, dollar goes down.
Yep. That's called risk.
No.
Risk on. You need to know that. Risk on, risk off. Risk on, risk off. Risk on, risk off. That will change the game for you, man. Make life a hell of a lot easier.
Alright, so tell us again. Dollar down, gold up.
Dollar down, gold up.
Wasn't that?
Dollar down,
Dollar down, gold up, market up,
S&P up.
oil up. Aussie dollar up.
Aussie dollar and gold is up.
New Zealand dollar up. Dollar CAD down, because that's the dollar's in a different part of the pair there, right?
Right.
Most of my trading is all correlation based.
You said dollar CAD or Aussie CAD? Aussie CAD.
Dollar CAD.
All of them. So the three commodity currencies is New Zealand, Aussie, and Canadian. Those are the three commodity currencies. But when you start going to the charts and you find supply in one, you find what in the other? Demand. Right? They all connect. And that's when you know you're looking at it correctly. All right? That's when you're like, okay, this is about to hit this. Now, a lot of guys will hedge. And they'll hedge to play it safe. I just don't. I'm either going to go both ways. I just won't do it. It's just not, that's not how I trade. I'm not saying there's anything wrong with it. Because you can certainly do that and hedge. But I'd rather just pick the winner. All right. Let's do the QQQ and then I'm going to get out of here.